In section 5-2, we are going to do something called a bank reconciliation. So we're going to compare our bank statement to what we think that we have on hand at the bank. And that will come along with some journal entries as well. So this is a bank statement. Some of you might still get bank statements mailed monthly. Maybe you get an email from your bank. But a bank statement shows everything that's happened with your bank account. Any deposits, withdrawals, checks that have gone through, anything that has been done at the bank. Checks that have gone through are called canceled checks. So if you wrote a check and that person cashes it or deposits it at their bank, then it is known as a canceled check. It has gone through the bank and it is done. Something else that is included on a bank statement is a service charge. So you might have a monthly service charge, maybe an annual service charge. The service charges could be for something like an ATM fee or any other type of fee that your bank might charge. But you also learn of these service charges on your bank statement. So it's important that we have bank statements because there's a lot of difference between what we have on our records compared to what the bank has on their records. So number one being the service charge. We only find out about that service charge that's been automatically withdrawn from our account at the bank. We only find out about that when we get our bank statement. Number two and number three, we keep track as soon as we write a check, we do the journal entry. Well, it might take the company we're writing the check to a while before they actually get to the bank. So that'd be considered an outstanding check. Something that we've recorded, but the company we wrote the check to hasn't taken it to the bank yet. Same thing for deposits. We may make a deposit on the same day that the bank statement is printed, and it might not show up on the bank statement. So that'd be considered an outstanding deposit. We have it on our records, but the bank doesn't show it on the bank statement yet. Finally, there's obviously a chance for errors. Anytime we're doing accounting, anytime you're at the bank making a deposit, or anytime you're writing a check, there's a chance for error. So we need to verify what the bank has compared to what we have. So here is a bank statement. On the left side, think of this as what we have on hand, what we think we have on hand, and the right side is what the bank thinks. So based on check stubs on the left and based on the bank statement on the right. So it's starting out with the date. It's always going to be the date on the bank statement. We take the check stub balance from our last unused check stub. We record any service charges, and that would come from the bank statement. And then we are left with an adjusted check stub balance. So what we had on our last check stub minus any service charges. So based on our check stub, we have $2,597. And we want to make sure that's what the bank has as well. So we start with the bank statement balance that was just mailed to us on January 31st. We add in any deposits that we know that we made between when that bank statement was printed, update our balance, and then finally subtract any checks that we've written that have not gone through on the bank statement. So those would be outstanding checks. We've written check 11, 12, and 13, and whoever we wrote those checks to has not gone to the bank yet. So they would be considered outstanding. Then we are left with our adjusted bank balance. You'll notice that step 4 and step 9, those two totals equal, and that is the whole idea of the bank statement reconciliation, that we find those two numbers and they equal. Now we need to record that service charge. So we have found out about a service charge from our bank statement. So service charges are also listed on a bank statement. So we need to record that on the check stub. So where the other section is, we write in service charge for $25. Since it's only one service charge, we don't need to add anything. So the only other area that we have is that $25, which we subtract to come up with our new subtotal. It's important to know that the bank automatically deducts the service charge from the checking account. So not only do we need to record that in the check stub, we also need to do a journal entry to record that service charge. So the journal entry is going to look similar if we would have wrote a check for a bank charge, except it was already pulled out of our bank account, so we don't need to write a check. It's instead going to be a memo. So our expense will be a debited. So the date, the 31st, miscellaneous expense, a debit of $25. We're going to credit cash because cash decreases with a credit. $25 came out of our account, so we need to decrease cash. And then finally, M3 is our source document. So it's important to know that we need to write a service charge 2 different places, the check stub as well as do the journal entry. So that is section 5-2.